Greensill Capital was a financial technology company that revolutionized supply chain finance. Founded in 2011 by Australian entrepreneur Lex Greensill, the company quickly gained a reputation for innovative solutions that enabled businesses to access cash more quickly and cheaply than ever before. By 2020, Greensill Capital had become a unicorn, valued at $4 billion, and had attracted high-profile investors such as SoftBank and the UK government. However, the company's meteoric rise was followed by an equally dramatic fall, culminating in insolvency proceedings in March 2021. In this video, we'll explore the rise and fall of Greensill Capital, examining the factors that contributed to its success, as well as the problems that ultimately led to its downfall. The rise of Greensill Capital. Lex Greensill had a background in farming and banking, and he founded Greensill Capital with the goal of disrupting traditional supply chain finance. The company's core innovation was to use technology to enable companies to access cash more quickly by selling their outstanding invoices to investors. This allowed businesses to improve their cash flow and reduce their reliance on expensive bank loans. The company quickly gained traction, attracting major clients such as Vodafone and AstraZeneca, and expanding into new markets such as healthcare and agriculture. Greensill Capital also acquired complementary businesses such as Omni and FreeUp, which helped to further expand its offerings. The problems begin. Despite its early success, Greensill Capital began to face criticism over its business practices. One area of concern was the company's reliance on a small number of clients, including Sanjeev Gupta's GFG Alliance, which accounted for a significant portion of Greensill Capital's business. There were also questions raised about the company's supply chain finance model, with some critics arguing that it could be used to disguise debt and inflate revenues. In March 2020, regulators in Germany began investigating Greensill Capital's operations, and in November of that year, Credit Suisse suspended $10 billion in funds linked to the company due to concerns over its exposure to Gupta's businesses. These issues would prove to be just the beginning of Greensill Capital's problems. The fall of Greensill Capital. The problems that Greensill Capital faced began to mount in early 2021. In February, the company lost its credit insurance coverage, which made it difficult for it to continue to do business. Greensill Capital also faced legal challenges, including a lawsuit from its former partner, Tokio Marine, which accused the company of false and misleading statements. In March, the company filed for insolvency, and its assets were put up for sale. The collapse of Greensill Capital had far-reaching consequences, with thousands of employees losing their jobs, and investors such as SoftBank and Credit Suisse facing significant losses. Lessons learned. The rise and fall of Greensill Capital provides several important lessons for the financial industry. One key takeaway is the importance of transparency and accountability. Greensill Capital's opaque business practices, such as its reliance on a small number of clients and the use of supply chain finance to potentially disguise debt, raised red flags for investors and regulators. Additionally, the collapse of Greensill Capital highlights the need for effective risk management and regulation in the fintech sector. While technology has the potential to bring significant benefits to finance, it also poses new risks that must be addressed. The story of Greensill Capital is a cautionary tale about the risks and rewards of disruptive innovation in finance. While the company's supply chain finance model brought benefits to many businesses, its opaque business practices and reliance on a small number of clients ultimately proved unsustainable. The collapse of Greensill Capital had far-reaching consequences, from the loss of jobs to the exposure of vulnerabilities in the financial system. As the fintech sector continues to grow and evolve, it is essential that we learn from the mistakes of companies like Greensill Capital and work to build a more transparent, accountable, and sustainable financial system.